Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 13th of September. It's been a fairly troubled week this week. Markets have struggled to shake off concerns around not only the Delta variant rising cases, particularly in the US, but also the possibility of slowing economic growth. The large miss from last week's non-farm payroll figures has had something of an overhang, despite a more recent unemployment claims filings figure improving, that is, falling. It's also, however, seen some switching back into growth stocks and big tech in particular. Earlier in the week, the Nasdaq hit another record closing high. In terms of the UK, we've seen GDP growth figures which have come out on Friday at just 0.1% growth in July against an expected 0.6% growth. Obviously, the fact that despite the easing of restrictions in July, the full easing of restrictions, we've obviously had, as has been well reported, staff shortages and disruptions to various supply chains. That being said, in the 3 months to July, the figure is up 3.6%, and if you look year on year, the figure is up 7.5%. This has been good in terms of the resilience of the UK economy so far, particularly for the FTSE 250, which remains the star of the show in UK investment terms. The FTSE 250 is up by over 16% in the year to date. In terms of the other indices year to date, we've now got a situation where the Dow Jones is up 14%, S&P 500 up 19.6%, the Nasdaq up 18.3%, and the FTSE 100 is up 9%. Turning to next week, there's some FTSE 100 companies giving us various trading updates. The first one is a trading statement from Associated British Foods. Shares are fairly flat over the last year. And of course, when we're talking about AB Foods, apart from their grocery and sugar divisions, we're mainly talking about something which is responsible for 40% of its sales, and that's Primark. They were very quick out of the traps in terms of previous easings of restrictions, with shoppers returning to their stores. At the same time, other retailers have reported that the high street footfall has certainly not recovered. It tends to be stronger in out of town retail parks. Nonetheless, Primark has up until now been something of a unique situation. So it'll be interesting to see how trading has been going since July. Indeed, in addition to that, it's increasingly getting into the US in terms of opening new stores. So we'll see if there's any updates there. Also, half-year numbers from JD Sports Fashion. Shares up 27% over the last year. Possibilities of 40% growth in revenues for the half year, which would be against 20% which had been expected. Again, US trading performance is increasingly becoming a factor. There has been some shareholder unrest, which has slightly been overhanging performance of late. And also, of course, there's more recently, in terms of the Competition and Markets Authority, some doubt over its proposed acquisition of Foot Asylum. Nonetheless, on the whole, it's been a positive story. And finally, Ocado, due third quarter numbers, shares are down 16% over the last year, although if you put that into the perspective of the last 3 years, shares are up 95% despite that latest dip. Obviously, we're going to be looking out for updates on the joint venture with Marks and Spencer, how online groceries in general are performing, and of course the star of its show, which is the smart platform, the robotic ability that the company has to deliver groceries, which is not only gaining traction in the UK, but getting increasing overseas success as well. So any updates on potential new tie-ups would be very welcome there. Also, it's been heavily investing recently in customer fulfillment centres, or CFCs. So it may well be in this trading statement that it gives us some further details there as well. Thank you for watching. Have a great week.